Welcome back. I'm Pratap here. Today is the 17th August 2024. In this video, I'm going to evaluate the performance of the high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab posts. Some of you might be seeing the tab community instead of posts. Whichever the tab you see, you click on the tab and then you will get access to this free training program. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you each time when we release a new video or any other important updates we will be providing at our Telegram channel. Now let's get into the analysis of the high liquidity zones generated in our yesterday's end of the day report. Because you know that high liquidity zone should be valid only for the one day, the next trading session, that is today's trading session. So yesterday at the end of the day, we have identified 7 high liquidity zones. With the help of NeoStock software, we identified 7 high liquidity zones from daily and 75 minutes time frame. Out of these 7, we got 3 trades and we got 2 successful trades and 1 is stopped out. We will discuss all the 3 trades. And then also I will explain how I fine-tuned these zones. The first one is SBILIFE. This is a daily high liquidity supply zone. We have a drop, 3 base candles and then a drop candle. This is what identified by the high liquidity zone. And this high liquidity zone fine-tuned with 75 minutes time frame. So in the 75 minutes time frame, we have a rally, 1, 2, 3, 4, 5, 6 base candles and then again a drop candle within the 75 minutes. Again within the 75 minutes, fine-tuned with 15 minutes time frame. So here you have a rally base drop. You have a rally base drop. And within this 15 minute zone, again fine-tuned with the 5 minutes time frame. We have a rally, 1, 2, 3, 4 base candles, we have a drop, base, drop. We have a drop, base, drop. This is the fine-tuned 5 minute zone. And see, there were price rejections before this fine-tuned 5 minute zone. That means the order flow might be very strong in this area. Next time when prices enter into this area, we can plan a trade. If you look into the 1 minute's time frame, you get a very good aggressive trade setup. If you would have observed in the 1 minute time frame, I am opening the chart in the 1 minute time frame. So very interesting thing you can observe. You have a drop base with the pro gap at the hidden body. You get a drop candle. The hidden body. That's why it is a hidden zone. Many of the people don't accept this is a leg out candle. This is a drop candle. That means this zone is hiding. That's why institutions many times they keep the order flow like this. For normal supply demand zone traders, the candle should be an explosive leg out candle. It should be an explosive drop candle, something like this. But this is not an explosive, it is looking like a base candle. But if you add the hidden body, from here, the close of this candle till here, you see a very explosive drop candle you can see. That's why this is a drop based drop. And how we are getting this explosive leg out with pro gap area, because there is a gap is there, it's a pro gap area. So a lot of order flow will be there. And this is the first clue. Prices came near to this zone and again came down. This is an indication that there is a strong order flow in this area. Maybe you may say, maybe this, why it is going down, maybe it is because there is a drop, base, a drop because of this order flow. This might be going down. Maybe that could be the reason. But this is also indication, see, both are very near to each other. There is a pro gap. And prices were, just before this zone, prices were started reversing. All these are all positive indicators. That's why, and also the risk is also very, very minimal, because this is a 1 minute zone, risk is very minimal. Nothing wrong in planning an aggressive trade, because you have two positive parameters are there. See, today the prices entered into this area and then started moving out, and finally it reached the 15 minutes target zone. At 2 o'clock 7 minutes it reached the, and when we got the trade today, at 9 o'clock 46 minutes candle we got the trade, or maybe if you miss next candle also 9 o'clock 47. So you got a very good trade opportunity in SBI Life, and finally reached the 15 minutes target. So how we got the 15 minutes target? See, there are no 15 minute zones before that. Here we got the trade. There was no 15 minutes zones in this area, and below that there is a 15 minute zone here. We have a rally, base rally. And this is the way SBI Life has given 10% ROI. It has given excellent ROI today. This is the trade we got, and finally it reached the target. Let me open the Excel sheet. See, SBI Life has given 12,206 rupees profit, which is 10% ROI. This is 1 minute aggressive trade in daily HLQ zone. Price action clue pro gap and rejections before the zone. So this is one successful trade from the high liquidity zone area. And the next one is INDUSTOWER Towers. This is also a daily high liquidity supply zone. So we have a drop, 3 base candles, and then a drop candle, drop base drop. This is what identified by our NeoStock software. And this I fine tuned with 75 minutes time frame, identified 2 75 minute zones. Here we have a rally, 3 base candles, and then a drop candle. And again add the hidden body. The moment you add the hidden body, this is a rally candle. Rally, base, drop. This is another 75 minute zone. And these two zones again I fine tuned with 15 minutes time frame. How we fine tuned? Here we have a rally, 4 base candles, and then again a drop candle with hidden body. This is the 15 minutes fine tuned zone. And also here in the second 75 minute zone we have a rally, 1, 2, 3 base candles, and then again a drop candle. This is another 15 minutes fine tuned zone inside the 75 minute zone. The 75 minute zones are inside the daily high liquidity zone. Again these 15 minute zones we need to fine tune with 5 minute zone, 5 minutes time frame. See, here you have a drop candle, 2 base candles, and then again a drop candle with hidden body. Drop, base, drop. This is the fine tuned 5 minute zone. And you have to plan a trade here in case if the first fine tuned 5 minute zone is violated. That means below there is one more fine-tuned 5-minute zone. If that is violated, then only prices will reach up to here. See here. You have a ERC candle, failed ERC candle as a leg-in. You have a base candle. This is also, you can consider this not a great leg out, but follow through candle is very good. So that way you can find, generally what happened, this also comes as part of the base, both together, because this is looking like a medium size leg candle. But the reason why I consider this is, compared to the earlier candles, this candle is, see, this is the ERC candle we are considering. Almost this length is also same. All these are all small candles. This is a medium size candle. Compare it to this is the size is bigger. See, generally how we decide is by comparing with the earlier candles. If the market volatility is very high, the candles looks very big. If the market volatility is very low, the candles looks very small. And compared to these candles, this definitely will be looking like a bigger candle. At the time you can consider that as a leg out. So that's why I told you in the training program also in lesson 3 and lesson 4, I have clearly explained. You need to compare with the earlier candles and then you need to take a decision. That's a very important thing. Our software also does the same. Sometimes you see leg out candle is small, sometimes you see leg out candle is big when you are when the software is generating. The reason is it compares with the earlier candles. And then the software algorithm takes a decision based on that. The same way we should also take the decision. Because all these candles are small candles. They are the base candles. Compared to this is a very big candle. So that's why we are considering this as a failed ERC candle. As a leg-in, it is qualified. Next again another small candle base, and compare it to all these small candles. Now this is a big candle. Forget about this length. Next further market volatility is increased. Now the sizes are started increasing now. See now the candles, the base candle size is getting bigger now. But in this scenario, earlier candles are small candles. So anyway, this is a drop base drop. This is a failed ERC drop candle. So this is the way we have a fine-tuned 5-minute zone. But here again a drop base drop is there. No, is there any use with this zone? No. Many times such kind of zones will be violated. That's why in my analysis I didn't consider this zone at all. Not even I added this zone. Because this is completely outside. There is no price action clues also available. See, this is the Friday's data. And this is everything is Monday's data. And Tuesday is started here. From here, Tuesday's data is started. I think from this candle, 9:15. So let me hide this. So that's why this zone is not having any importance, a drop base drop. But today when market is started, prices reached up to here and then started moving down. And it created an interest on me. Why? What is the reason for prices were started going down? Then immediately I have seen this drop base drop. The moment I draw this zone, this is the supply zone. Then I am surprised. So there were rejections before this zone. Price didn't go into this zone. Just before entering, maybe if you would have added a little small entry buffer, it could have been a successful trade. But what is the reason for taking this trade? There is no price action clue, so you cannot take this trade. Because many such kind of zones will be easily violated. Fine-tuned zones we have guarantee. At least 80% guarantee. Fine-tuned zones in high liquidity zones, they are mostly successful. But here, this is not a fine-tuned zone. This is outside the 75-minute zone. So that is the reason why I not even consider it yesterday when I drawn all these zones. But today morning, once the market is started and prices were started moving down, then I realized what is the reason for this fall. So this 5-minute zone is the reason. So immediately we got a price action clue. This price action clue indicates there is a strong order flow in this area, even though it is not a fine-tuned zone. See, ultimately we want the zones that is having strong order flow. This price action clue has confirmed that. So what we can do next time again prices are entering into this zone, definitely we can plan a trade. See, market was also again started moving up. They didn't reach into the zone. Even if you had some entry buffer also, you will be missing the trades because it is not very near. But price action clues are indicating in this area there is a strong institutional order flow. Twice prices came near to the zone, but we didn't get the entry. But here you see, we got the entry, prices entered into the zone. At 1 o'clock 30 minutes we got, that means we have only 2 hours time period. Here we faced a problem. What is the problem? The 15-minute zone, the target zone. And we don't have, see, all these are all violated. This zone is already violated, rally base rally, this is violated. So it is no more valid. So here you have a drop base rally is there. And reaching up to here during the last 2 hours of the trading session is impossible, almost impossible. Rarely it may happen. So we can't target. Then what? How you can target? See here, there are a lot of rejections. Let me draw a horizontal line, you will get clarity. Where is it? Yeah. See here, from this area prices were, somebody is holding the prices. That means if you want to plan a trade somewhere in this area, you need to exit. So who could be the reason? There is a 5-minute zone. We have a drop base rally that is currently holding the prices. This is the one holding the prices. Either you can exit at the type 1 proximal or maybe type 2 if you are aiming for more. But today it reached, but I am sure most of you people might have been exited here. This is the one. Drop base rally. Say earlier prices reached this drop base rally. The reason why I thought it will reach type 2 proximal, because already it reached, it already tested the type 1 drop base rally. The type 1 proximal is already tested in this candle. So I have confidence that maybe type 2 proximal line it may reach. See, almost it reached with a very small gap. But anyway, before you exit, with some buffer you will exit. So near the zone definitely you will exit. And moreover, there is a 1:3.5, close to 1:3.5 RR is also there. So definitely this will be a good trade. And we got this price action clue rejection. When we got this rejection, not in our yesterday analysis. Today morning during the live market, we got this price action clue. This is the reason why always we need to observe the price actions, even in the live market. If you would not have observed this, you simply blindly, you might have depended in our yesterday's analysis. You were waiting for this particular zone. This is the area you are waiting prices. But today prices, did they enter into this area? No, they didn't enter into this area. You might have missed a very good trade, a very good aggressive trade. Already in lesson 21 you learned price action clue rejections before the zone. The multiple rejections before the zone. This is the one. This came very close. This is very close. But the only reason why we didn't take a trade is because this is a normal 5-minute zone. Many times such kind of 5-minute zones will be violated easily, many times. More than 80 to 90% scenarios, these zones will violate. Only 10% scenario, with the help of the price action clues, the aggressive trades will work very well. Because the prices didn't go beyond and they reversed back, now we got the clue. After this movement only we got the clue. this zone is having a strong institutional order flow in this daily high liquidity supply zone. So you should plan an aggressive trade, and we got that opportunity at 1 o'clock 30 minutes candle today. And finally reached the target in 2 o'clock 45 minutes candle. You might have exited. So how much profit Indus Towers has given? It has given 12,410 rupees profit. But ROI is 3.3%. See here. SBILIFE also same profit. Indus Towers also almost same profit. But here ROI is 10%. But here ROI is only 3.3%. What could be the reason? The reason is the cost of one futures lot. Here the cost of one futures lot is around 1.5 lakh. And here the cost of a futures lot is around 3.5 lakhs. So that made the difference. Due to the futures margin cost, your ROI is reduced. Because your investment is more. Suppose I have only 2 lakhs with me. Can I buy this future? No, I cannot buy this future. But definitely I can buy this future. I can go for a short here. Here I cannot go for a short. So that is the reason why your investment, based on your investment, the ROI will change. So please remember this point. And the next one is Dabur. Dabur is a 75 minutes high liquidity supply zone. I am sure most of you would not have taken this trade, but still we have to, because our fine-tuned zone is violated. Why you would not take? Let me tell you the reason. But before that, what is this high liquidity zone? We have a rally candle, 1, 2, 3, 4 base candles, and a drop candle. This is what identified by our software. And this one I fine-tuned with 15 minutes time frame. Here we have a drop, 2 base candles and a drop, a 15-minute zone. And again we have a drop, 2 base candles and a drop candle. This is another 15-minute zone. And both these 15 minutes fine-tuned with 5 minutes time frame. So here we have a rally, base, drop, rally, base, drop. This is an excellent zone. See, it is already tested once and tested second time and third time. Recently it was tested, not today, yesterday it was tested, and at the time yesterday, see, prices went very deep inside, almost close to the distal line. There are higher chances next time this zone will be violated. We know that. That's why we can't plan any trade in this zone. There is a very high risk. And also this could be a high liquidity zone. But this time a new high liquidity 5-minute zone is not created here from here. By picking the orders, it is now it is only a pivot now. A rally, drop. And also during this pivot creation, prices went very deep inside. So it's a high risky to take a trade in the high liquidity. Maybe sometimes, until the 5-minute zone is violated, some people will keep on taking the trades. Because 3 or 4 opportunities it has already given. See, this opportunity gives profit it has given on Monday's trading session. And finally today this zone is violated. But before that there is one more fine-tuned area. We have a drop candle. At the hidden body, some more body, you get a drop. Anyway, it is a leg candle only. You have 2 base candles and then again a drop candle. This is an excellent zone. A very good fine-tuned zone. There is no doubt in that. Definitely we have to plan a trade. And it is a fresh zone. But unfortunately, today in the morning, 9:15 candle, it is violated. The second one, anyway, we can't plan a trade. This is already expected that this second one is violated, because earlier already it is tested more deep inside. It is violated, expected. But this we didn't expect, right? This is a very good zone. Okay, well, you may ask a question. many of us won't get any loss in this particular zone. The reason is you want to get the trade first of all. The reason is, let me go to 1 minute time frame. The zone is violated in the first 9:15 candle itself. See, this is the 9:15 candle. 9:15 candle, it is opened and pierced. It is opened here and then it is pierced. Those who don't place any orders at 9:15, mostly you might have missed from this trade. Because once it is pierced or violated, you won't plan any trades because order flow is consumed. You won't plan anything. Let us assume some of you placed some pre-orders. Mostly intraday traders we won't keep. The reason is many times with gap up prices will go. So with that fear, once market starts, we will place. Maybe 9:15 you placed your order. Let us assume it is executed in 9:15. Soon after market opened in 9:15 candle itself. At the time your trade would have been stopped out. So if that is the case, you would have got 875 rupees loss, which is 0.6% on your investment. Investment means one future margin cost. So it's a very minimal one. The loss you would have got would have been a very minimal. You see, when we are getting profits, we are getting profits like 10,000, 7,000, 4,000. That way we are getting profits, 10,700. But when we are getting losses, it is like less than 1,000 rupees. Rarely we get above 1,000 rupees or 15 or 2,000 rupees. See, this is the only one, 2,000 rupees loss we got. But remaining all less than 1,000, 700, 998, that means close to 1,000. This is 438 and this one 875. So we have 5 stopped out trades during this month. Out of the 3 stopped out trades happened on 3rd and 4th. After that we got a very good profits in these stocks, and today this is stopped out. But anyway, I am sure many of you would not have taken this trade. Similarly, one of these stocks also same thing. On 9:15 candle, one of these, I didn't remember which one, but one of these trades. This is also at morning 9:15. Mostly you might have escaped. You would not have taken trade at 9:15 candle. But I'm registering in case if anybody order is executed at 9:15, we have to consider our HLQ zone failure. We need to consider. See, sometimes 9:15 candle, we are getting successful trades. Your order might not have been executed, but sometimes you are getting 6%, 7% ROI also we are getting at 9:15 minutes candle, successful. Still the reason why we are executing is, even if 1% trade is executed, it is a success. For that point of view, I am considering morning 9:15 trade. But many of you won't take trades, I know that. Okay, Dower we got the loss 8,875 rupees, which is 0.6% negative ROI. So this is about Dower. And next remaining stocks, they are all daily time frame. Let us see quickly. Bank of Baroda, I think Bank of Baroda already explained, if I am not wrong, how I fine tuned. This is a 75-minute zone. I think in the earlier videos I explained one of the videos. But in case if you don't remember, this is rally base rally. This we fine tuned with 75 minutes time frame. Here we have a drop base rally, and this is not a fine tuned zone, but this is an aggressive trade setup that I will explain why I have drawn. But this is a valid fine tuned 75 minute zone. Within this fine tuned 75, again fine tuned with 15 minutes time frame. We have drop base rally. This is the 15 minutes time frame. Within this 15 minutes time frame, again fine tuned with 5 minutes time frame. Let me show you. So here we have fine tuned 5 minute zones. We have a drop, 3 base candles, and then a rally, and also drop base rally. These are the fine-tuned zones, and prices came near to this zone and started moving because of the pro gap. Because there is a pro gap is there that was pushing the prices. Anyway, today we didn't get any trade opportunity from in this zone. Okay, now another one, aggressive trade setup. And this zone is already tested. Still, why we are considering? If the risk is small, nothing wrong in planning for another trade even though it is tested. See, this is a rally, 2 base candles and a rally. This is already tested. Let me show you. See here, the zone is already tested here. It picked up the orders and then started moving up. But even then, why we are considering? Because still there were a lot of rejections before this zone. See here, in the recent price action, just near to the zone, prices were started moving up and also created a new 75 fine-tuned 75-minute zone. That means order flow before this zone is very strong. That means institutions might have added a new order flow in this area. That's why we are considering. Maybe this may act as a bear trap for this fine-tuned 75-minute zone. Not only here, see here also again, once again came very near, and again a 15-minute zone was created inside. Because the order flow before this zone area. Again here, because anyway, a new order flow is created, probably it might have been spread around this area. That's why still keeping an eye on this 5-minute zone. This is not a fine-tuned 5-minute zone, but aggressive trade setup. We are still watching this. So this is what we have to understand. Probably these aggressive trades will work if these fine-tuned zones are violated and prices enter here. Probably it may give again a very good profitable, because this is also acting as a bear trap. So this is about Bank of. Next one is a Balram Chini. This is also a daily high liquidity supply zone. This daily zone is having a 75-minute zone, but not further fine-tuned. Failed ERC, leg in, 4 base candles and a drop candle. That's it. After that I didn't fine-tune. That means 15-minute structure is not good. Still I have a 5-minute zone I have drawn. You know the reason. See, the rejections before the zone. Again the rejection before the zone. That is the reason why this will be going to be a very good aggressive trade setup. These rejections indicate strong order flow in this area. Next, in the 15 minutes time frame, see, it's a very bad structure. Lot of consolidation. This is a rally candle, drop candle, in between no base candles. This zone will be violated easily. Next time when prices are entering into this 75 minutes area. But we didn't get any, so far price didn't enter into this area. But still we have a 15-minute zone, 5-minute zone here within this area. 15-minute structure is also not good. Go to the 5 minutes time frame. Now we can identify an excellent 5-minute zone. We have a rally, 2 base candles and a drop candle with small, very small gap. But prices near to the zone came down. Again prices went here in this candle, again a sharp rejection at morning 9:30 candle. Maybe this could be, this is also at 11 o'clock candle. So this is a clear indication, a strong order flow here. So we can plan a trade based on the aggressive trade setup with price action clue rejections before the zone. Okay, the next one is Godrej consumer products. This is also a daily high liquidity supply zone. We have a rally candle, 3 base candle, 4th one a medium size candle, leg candle, part of the base, and then you have a drop candle with a hidden body. This is a drop candle. Today prices entered into the area but not into the fine-tuned area. So this I fine-tuned with 75 minutes time frame, identified 2 75-minute zones, drop, base, drop, again drop, base, drop. Both are like LOTL zones, level on the top of the level. And these 75-minute zones are fine-tuned with 15 minutes time frame. So here you have a 15-minute zone, drop 1, 2, 3, 4, 5 base candles, and again a drop candle. Here also drop, base, drop, again pro gap is also there. The pro gap is the reason for this rejection, today's rejection. Next 5 minutes time frame. See here you have a 5-minute zone, maybe a leg candle, a medium size, 1, 2, 3, 4, 5, 6 base candles, and a drop candle. But still why I considered is, see the rejection. Next candle, prices came and sharply rejected. That means strong order flow is there in this area. And here again a drop, base, drop, the 5-minute zones. Today prices can near to this because of the pro gap. And you can't cover the entire pro gap because of the risk management. Even today's open level also you can't place your orders because of the risk management. RR also you won't get. So that's why you can't consider such kind of trades. But next time when prices go beyond this, we get a trade opportunity. And the last one is a Hindalco. This is also a 75 minutes this is also a daily high liquidity supply zone. Hindalco. We have a drop, 3 base candles, and then a drop candle. This I fine tuned with 75 minutes time frame. 2 75-minute zones, again LOTL zones. Rally, 3 base candles and a drop. Again rally, base, 2 base candles and a drop. This again fine tuned with 15 minutes time frame. Here drop, base, drop, again drop, base, drop, and these 15-minute zones are LOTL zones. And then again you have a ERC candle as a leg-in, base, drop. This is another 15-minute zone. And this is an aggressive trade setup. There is no proper 15-minute zone. Still I have drawn an aggressive trade setup. 5 minutes time frame I will show you. First let us look into this area. This I didn't draw any 5-minute zone here. Have you observed? This is only 15-minute zone. The reason why I didn't go for 15, there is no proper structure, lot of consolidation here. This kind of zone will be violated easily. But here we have again a fine tune. This is a ERC candle drop because prices are going down, and then 1, 2, 3 base candles and then a drop candle. This is the fine tuned 5-minute zone. And another interesting thing is, see, a rejection before the zone. See, prices are coming and going down. This is a fine tuned 5 minutes. Apart from the rejection, so a strong order flow is there. See, prices entered into this area and then came down. That means this fine-tuned 5-minute zone is already tested. Because I told you, because of this price action clue, we confirmed this fine-tuned 5-minute zone is having a very strong order flow. See, when we got the trade opportunity on 30th August, Friday, prices entered and sharply it came down. It might have given a very good profit on that day. But anyway, we can't plan a trade because it is a tested zone now. And moreover, prices went deep inside, almost close to the distal line prices reached. So it consumed the entire order flow. So you can't plan any more trade in this fine-tuned zone. It is a tested zone. And also here also see drop, base, drop. This is an aggressive trade setup. Prices were nearing to this zone and then came down. Again almost they reached. Maybe a few paisa difference. This is a risky, maybe next time whether you want to take a trade or you don't want to take a trade, it's all depending on your risk handling mechanism. If the risk is very small, even if it is stopped out, no problem. If you feel, plan a trade, because the risk is very small. Next time if it gives another successful trade, because this rejection and after that prices came down, definitely there is nothing wrong in trying again. Prices also did not enter into type 2 proximal area, fine-tuned area. This is the type 2 proximal fine-tuned area. So if you want to try your luck again, plan another trade. If you don't want to take any risk, you can leave it. It's up to you. But opportunity is there here. If the risk is, even if you are willing to lose a small in case if the analysis is going against, then you can plan. And this is the 15 minutes fine-tuned area. We have a drop, base, a drop. This is the fresh zone, but prices didn't get into that area. So that's why we didn't get any trade. And remaining 3 we already discussed. So this is about high liquidity zones. But at the same time, you should also understand in HIT we got a very good. Yesterday, you remember, in Bosch, we got a very good successful trade. Around 9% ROI we got yesterday. The same high liquidity zone, of course it is not listed today, but in that high liquidity zone, a bullish trade setup was identified by our software. That's why I got some interest on that. In the HIT trades, I'm not getting into all these analysis, only Bosch I'm going to focus, because a lot of learning is there. And this is a, this is a daily, 75 minutes high liquidity zone. Yesterday we got a trade, successful trade from this zone yesterday. See, in this candle we got a trade yesterday with small entry buffer. We got a trade, under that, after that a big movement. It has given a very good trade opportunity in this fine-tuned area. Prices moved. This is what we have experienced. That means we captured this move yesterday. And moreover, the prices were closed inside the zone yesterday. So that is the reason why our software did not identify the stock in the high liquidity zone. I'm talking about high liquidity zones. So this is the reason why you didn't find the stock near high liquidity zone. But in our reports, everyday reports for the premium subscribers, I'm not only giving you high liquidity zones, I'm also giving you bullish and bearish trade setups for all the 4 income trades. Monthly, weekly, daily and hourly income trade setups I'm generating every day. You are all aware. I think all the people, 1 week later also I'm giving those videos to all the members and the public. Whoever is there subscribes to our channel, you will be getting that. At least 1 week late you will get. Because sometimes those reports will be helping you for MIT related trades or WIT related trades. But you can't get short-term trades, because mostly those trades might be closing, or HLQ trades will be closed before the reports you get. Okay, in that DIT yesterday, in the not DIT, sorry, HIT, hourly income trade. In the HIT, it displayed the stock. Let me go to the 5 minutes time frame. This is the zone. Yesterday, it was identified, rally, base, rally. Even in the Telegram group, I have posted all the DIT bullish trade setups generated in our yesterday end of the day software report. Today I posted. After this trade completed, I have posted all the zones. Rally, base, rally. This is a 5 minutes trend change origin demand zone. And also the target is, this is the zone, drop, base, drop. This is the 5 minutes trend change origin supply zones. Probably sometime prices will be moving within this area. Exactly, that is what happened. But this is not a 15 minutes TCO zone. This is a 5 minutes TCO zone. TCO zones always indicates the ITF time frame. If this 5 minutes TCO demand zone is ITF, where you want to take a trade in 1 minute. Of course, you can also take in 5 minutes if the risk is within your handling capacity. But I have got interest in, is there any order flow in the 5 minutes? So with that interest, I went to the 1 minute time frame, and the moment I looked into this 1 minute, the surprising thing is 1 minute we have a drop base rally, very good follow through candles, and this drop base rally, the small, very small, risk is very, very small, but this small area is having a very, very strong institutional order flow. How can we say? Because every time prices reaches here, it is holding the prices. It is not letting the prices go below. Below identified a trap, rally, base, rally. That's why I combined both these zones. They are LOTL, 1 minute zones. That's why I combined. So my entry should be at this 1 minute zone, and my stop loss is the below 1 minute zone, distal line is my stop loss. This is the way I prepared my trade setup. And this is a bullish trade setup. In bullish trade setup, always we look for long trade opportunities. Why it is a high liquidity zone? First of all, the drop base rally. Why it is a high liquidity zone, the drop base? Here you may ask a question. This is not a drop base rally. This is a drop, and this is going to be again, if you add the hidden body, this is going to be a rally candle. That way again you can consider. But somehow I ignored that point. That is the flaw in my analysis. The reason why I combined is just quickly, because in the live market quickly we have to do analysis. I just ignored it. Actually, this is going to be a rally. See here, this is the drop. You need to add the hidden body. The moment you add the hidden body, rally, drop, rally, and again rally. So there is no this is not a valid institutional order flow. So I am deleting. But anyway, the low of this leg out I considered as actually earlier I considered the zone, but anyway, this is going to be my stop loss. So let me mark that. But this is the real institutional order flow, drop base rally. See here, price just touched and moved up. Again, prices came. They came very close to this distal line that just touched the distal line mode. But still it is valid. The reason is you have a drop base rally. After that again prices entered in this area and moved up. See, it was holding. It is not letting the candles go below this. Institutions keep on adding the order flow in the same area. This is an indication, drop base rally. The same area. The reason is earlier the prices went deep inside. Almost they are about to touch the distal line. Even here also. What is the distal line? The low of this candle or see what is the low of this candle? 33,900. What is the low of this drop candle? 33,901. This is 900 is the low. What is the low of this leg out candle? 33,910. So the base candle is having the low, that is 33,900. Prices didn't go below 33,900. See, the low of this candle is 33,965 paisa. See, the low of this candle is 33,900, exactly 900. The low of this candle, again 33,905. So none of these candles breached this zone. That means this 5 minute, this 1 minute fine-tuned zone is not violated. But multiple times it is a holding. That's why I am calling it as a high liquidity zone. The 1 minute high liquidity zone. See, today prices came very near, maybe few rupees if you add the buffer. Definitely we need to add, because the 1 minute zone is a very small zone. Added some buffer, within the buffer area prices entered. The blue color line where I kept the stop loss, and after that prices were started moving up. Sorry. Even I used the trailing stop also here. the 1 minute trailing stop, they were not breached. Let me show you. This is a rally base rally. Anyway, prices didn't retrace up to this area. All these are not valid zones. Here you can consider drop base rally. So prices picked up the orders and started moving up. Within this drop base rally area, it picked up the orders, but this is not violated. And then they were started moving. Here drop base rally, hidden body you can add, but anyway, prices didn't come into this area. Oh, they were moving. Okay. Let me show you the next candles. This is a drop base rally and it picked up the orders. There is a pro gap area picking the orders from the pro gap area and then started moving up. Again here a ERC candle base rally. And this is holding the prices, this zone is holding the prices. And maybe you can consider again a rally, and these are all base candles, 1, 2, 3, 4, 5, and then rally, rally, rally moving. This is not a base candle because if you add the hidden body, this is again a rally candle, rally, rally, rally. And then prices came down exactly from this area. It picked up the orders again, started moving up. Again a drop base rally was created. From here again it is picking the orders. Again rally, drop base rally is created. The prices were moving and finally they reached the 5 minutes TCO zone. And this is the way it has given you 1:35 RR it has given. The RR is 1:35 because of the small 1 minute zone, high liquidity zone. See the 1 minute small, very teeny zone. But that made the logic. That made the magic. And finally reached the TCO zone. After that again it pushed the prices up to this. You may ask a question, why can't we take a trade again in this 5 minutes TCO? It is a high priority, but it is a low priority high liquidity zone. It's not high priority. Both these zones are low priority. But why I consider this trade is, there are strong reasons. Reason number 1, this is a high liquidity zone. The 75 minutes high liquidity zone. In that 75 minutes high liquidity zone, we got a bullish trade setup. In that bullish trade setup, again we got 5 minutes TCO zone. Even though this TCO zone is a low priority TCO zone, because already it is created, after that in the retracement only prices reached here. Before that many zones were created and it is changed from high priority to low priority. When a TCO zone changes from high priority to low priority, I already explained in lesson 21.3. The last Sunday, I have released the video. In that video, I explained. So it's a low priority. 5 minute zone is low priority only. But this low priority high liquidity zone is part of the 75 minutes high liquidity zone. High priority high liquidity zone. That's why this bullish trade setup is having higher chances to get success. That is what happened today. If this is not a 75 minutes high liquidity zone, I might not have given much importance to this particular stock. I will be looking for bullish trade setup violation. After that, I want to identify the TCO zones. Any retracement, I want to plan a trade. And moreover, this 5 minute zone is having confluence with the 15 minute zone. This 5 minute zone. Of course, 1 minute zone is having confluence with 5 minute zone. 5 minute zone is having confluence with 15 minute zone. 15 minute zone again having confluence with 75 minutes high liquidity zone. All these are all different reasons for getting such a huge success for this trade. And today it has given over 10,000 rupees profit. 10,000 or 12,000. I posted at our Telegram channel. I didn't remember the number. The profit, how much it has given. But see, it has given, maybe I think I didn't calculate the profit. If anybody wants to see how much profit we would have got, you see here. Go to the 5 minutes time frame. Even I think I didn't calculate. But let us see. What is the low of this zone? 34,750. 34,750 minus the entry. So I am calculating the maximum profit. See, we might have exited before itself. Before it is entering into the 5 minutes target zone, we might have exited. Why we exit before? Because of our human psychology. Always we are happy after it reaching certain percentage. But the software, it is doing its job. So that's why I am calculating. I am not telling you how much profit I got. I am telling you how much opportunity this zone has given. I might have exited a little before. I am happy with certain amount. Because I would not have carried this trade till it reaches the zone, supply zone. Because people use different techniques. Based on some price action clues, we exit earlier. Or based on the RR, 1:3 RR, some people will exit. After reaching 1:5 RR, people will exit. We have different mindset will be there, traders. But forget about all the traders' mindset. But how much, the maximum opportunity it has given, that we have to calculate. So what is the entry? The entry is with buffer we added. As per the buffer, the entry is 33913. This is the entry price. 33913.40 paisa. 33913.40. Let me check again. 33913.40. Okay. 836 rupees profit it has given for each share. So let me open zero the margin calculator. So this is Bosch. So 25 stocks into 25. So it has given 20,000 rupees, 915 profit, maximum profit. Today, whoever is taken and carried till this 15 minutes zone. When you would have taken the trade, in this candle you got the entry, 9 o'clock 40 minutes. And when it reached 12 o'clock 33. So 3 hours you would have been, you should carry this to get this profit. 3 hours you should hold to carry this. If that is the case, you would have achieved 1:35 RR. You would have got 20,915 rupees profit. And also ROI. So into 100 divided by, where was the closing price approximately? See, here it was closed, but we took a trade here. The price might be, see, when prices are going up, the margin cost will increase. Definitely, it is less than 53,000, less than 1,53,000, but let me keep around 1,53,000 I will add. Definitely, it is another 1,000 or 1,500 rupees less might be there, but approximately I am adding 1,53,838. 13.59. That means 13.6% ROI we got. We would have achieved. Those who took the trade here and carried till this 5 minutes TCO zone, target zone. Software also suggested the same. Software suggested this 5-minute zone is the entry and this 5-minute zone is the target. I already posted the report at our Telegram channel. Please look into the Telegram channel, the software generated report. People already who took a premium subscription, they know, because they have access to the video. They might have already seen the report yesterday itself. But today, to make you people understand how powerful these bullish or bearish trade setups, I just posted. I took the screenshot and posted at our Telegram channel. So the software suggested this is the entry and this is the target. Suppose you would have taken your trade at 5-minute zone, not at the fine-tuned 1 minute. How much RR we would have achieved? Okay, we will do. Let me increase the risk. This could have been my entry. This could have been my entry. This is the entry. I would have taken my trade. At what time I would have taken this trade? At 9 o'clock 20 minutes, 5 minutes candle till 9 o'clock 40. Prices were within this zone only. After that, prices were started moving up. Still we would have got 9.99. That means 10% ROI we would have achieved. 1:10 RR, not 10% ROI. Sorry for my mistake. 1:10 RR we would have achieved. 1 minute zone we got 1:35 RR we got. If it is a 5-minute zone entry, type 2 proximal entry, you would have got 1:10 RR. Still it is a very big RR. The 5-minute zone entry with 1:10 RR is a very big RR. Software reports worked perfectly. Software predicted very well. But whatever software suggested, have we taken the trade or not, that is up to our individuals. But many times these bullish and bearish trade setups at hourly income trade will violate. The reason why we concentrated on this stock is because this Bosch is a 75 minutes high liquidity demand zone. Yesterday only we took a trade in Bosch. Yesterday we got around 10,000 or 11,000, I didn't remember. We got the profits. Okay, here we have. See, yesterday we got 10,000 rupees profit, 6.6% ROI we got yesterday. But today it has given you 13.5 or 13.6% ROI. Even if you would have taken a trade at 5-minute zone, still you might have got maybe around 12% or 11.5% ROI you would have got. Still, even if you take a trade at 5-minute zone. But only question is, are you holding the position till it reaches the 5 minutes TCO supply zone, or you exited before? Because sometimes it will happen. After getting 10,000 rupees profit or 12,000 profit, we will have a fear that prices will go down and we want to book the profit and we exit. Many of you might have exited in this area because sometimes it was holding. See, here, until here prices moved very smoothly. There was some disturbance for about half an hour or 45 minutes time period. Or some people prices closed very near to this, they would have exited here. Generally some people keep a lot of buffer. At least what is the risk it is having, that much buffer they keep and they might have exited. Okay, the advantage for them is they might have got a maximum profit. Those who exited here, you might have captured the maximum profit, but the advantage you get time. Because you exited, same capital you would have invested in some other stocks. See, at 12 o'clock, 20 minutes, it reached the target. After that, you would have participated in this trade. What is that? INDUSTOWER. Because INDUSTOWER trade is executed at 1:30. The same capital you would have invested, but you should be having 3.5 lakhs capital. Then only you take a trade in INDUSTOWER. Otherwise, you can't. Hope you understand the power of these bullish and bearish trade setups, mixing with other concepts. See, all these concepts, why every day I am explaining, one thing is I want to look into HLQ zone performance every day. Previous day report, what is the performance? For that point of view, every day I am doing this analysis part after the market hours. You may ask a question before the market, why you are not doing this? Some people already asked this. I clearly told two reasons. Reason number one, I am not a SEBI registered, so before the market I cannot give you any recommendations. And reason number two, even if I am SEBI registered, still I won't give you recommendations. The reason is I want you people to become an independent traders. When I am fine tuning the zone, same way you will also do the fine tuning. You see, some of the people who took the premium subscription, they are fine tuning the zones. Exactly the same way how I am fine tuning, they are also fine tuning and they are also getting the profits. Maybe sometimes one or two stocks, some differences will be there because of some lack of some experience, because sometimes the zones may not be very clear while fine tuning. Sometimes. But many times the zones are very clear. And when those fine tuned areas only, prices are reversing. There only you are getting your entry or you are reaching your targets. Whatever you learned in lesson 16, same concepts only. Everybody is learning, and whoever took the premium subscription, they are also using the same lesson 16 concepts for high liquidity zone, how to fine tune the zone. There is nothing greatness. Once you build the skill, it is an advantage for you because market is dynamic. Anytime scenarios are changing. You will simply change your decision. You will identify new targets compared to the earlier targets when you did your analysis. That way you exit early, so that prices won't reach our earlier target because markets are dynamic. So at the time you get profit. People who took the recommendations, they are keep on waiting and it never reach. Finally, the prices will turn and it will hit your stop loss and you get the losses instead of getting profit. Because such kind of things don't want to happen. That is the reason why I am making all you people become independent traders. You will be in a position to trade, or you will be in a position to take decisions when market is changing. If you are having the skill, you will be in a position to do the things. When you are without learning the concepts, you are depending on the others to provide the calls. You never become a successful trader. Hope you understand the seriousness. This is the reason why I provided the complete free training program. How to realize and understand. People who seriously learning the concepts, tomorrow they all become very good successful traders. Software is only helping to improve the efficiency of the traders. Why instead of analyzing 200 stocks, now software has given all these 10 or 11 stocks. Now these 10 or 11 stocks you are analyzing. That's it. How to analyze you already learned in my training program. Within these 10 stocks only, 10 or 11 stocks only, you plan your trades. Same thing, it is bullish bearish trade setup. HLQ zones, every day it is giving you some 2 stocks or 3 stocks or 4 or 5 stocks. You analyze only those stocks. Within those stocks only you plan your trade. Because HLQ zones are giving a huge more profits and also success rate is high. Many times you won't be having any fear of losing your capital. Moreover, it is helping to build your capital. When you get more and more profit, what happens? Your capital will increase. That profits again you will be using for buying some other stocks. Okay, this is about today's session. Hope it will be helpful to you. Let us all meet again in our next video. Thank you.